This is going to be a continuation, not a continuation, but like building off of my last video, going into trading with the trend, higher time frame, following the macro trend, paying attention to key swing highs and swing lows. And I'm just going to be breaking down two trades that I took this week, um, or yesterday. Today's Thursday. Took a trade on Wednesday, and then the market closed, and I took it in the middle of the night, like after midnight Thursday. So yeah, I'm just gonna be this. The examples here are a perfect example of how I use the market structure. The market was forming perfect like stair step. Higher high, higher low, higher high, higher low. So it's gonna be an easy video to go over and explain to you how I use these swing highs and swing lows in the market structure. Okay, so first I would say go watch the video that my most recent video, because it was like the first video in a while where I was going over my new style of trading, higher time frame, looking for bigger trades on longer trades, not like 1 minute time frame. I'm trying to get away from 1 minute time frame intraday trading and more play the overall trend and catch longer moves. Okay, so I'm just gonna get into these two trades that I took, and yeah, explain the market structure, how I view it. Okay, so obviously we could see, and I do this on the higher time, but when I'm paying attention to market structure and trend, it's on the 4 hour and 1 hour. Obviously, we could see we're in a nice uptrend, right? We have, let me just draw this out for the sake of the video. Higher low, higher high. When we make a new higher low and we're in an uptrend, what happens? It's followed by a higher high, right? So we make the higher high, we pull back, we make a higher low, pull back, make the higher low, make a higher high, pull back, make the higher low, make a new higher low, higher high, which this was the trade I was going for after we made this higher low. Let me just get a shot for the thumbnail real quick. Hopefully, like the auto thumbnail generator just picks up on this, and okay, boom, thumbnail. Okay, hopefully it got that. All right, so yeah, that was a complete waste of time. But like I said, we make a new higher low, we push up, make a new higher high. When we make a higher high, we pull back and make a new higher low if we're in an uptrend. So while we're doing our analysis and stuff, we're and reading the trend, we're trying to trade with the trend, which means we're trying to um or we're paying attention to these higher lows and higher highs to try and catch the next leg, right? If we're pulling back, you could look to short, right? Say we make a new high, you could look to short to where price is going to make the new lower low, and then the higher low, once you make the higher low, you can look to play back up into a new higher high. Okay, and that's exactly what I did. So everything I just said is what I was thinking of coming into market this day. We put in a higher low, we started pushing up, market opens. I'm thinking at this time, okay, if we're going to keep pushing up, I'm going to look for longs into this high or even above it. Or if we fail here, maybe we're going to change the trend and go take out the lower low. A thing I like to go by is above higher lows, right? Above swing lows, above higher lows, which would be this level, we're looking for longs. Because we're in an uptrend, we put in a higher low, swing low. As long as we stay above this low, I think we're going to move up into this high, right? And along with swing lows, we have swing highs. Below swing highs, we're looking for shorts, right? For like reacting to it, right? If we're pushing up through it, that's different. But like above swing lows, we're looking for longs, and below swing highs, we're looking for shorts. Now, if it's a situation like this, or situation like this where we have the swing high. We're looking for shorts below it until you put in a new swing low. That's what I should have said. So we put in a new swing low, start pushing up. So we're looking for it to trade up into that swing high, and then obviously above swing highs, we're looking for longs, and below swing lows, we're looking for shorts. If that didn't make sense, it probably didn't make sense. Just rewind the video. Okay. So because we put in the new swing low, that's why we're looking for longs up to this swing high. Whereas if we hadn't put in a new low yet, we just made a new swing high, we could look for shorts down to a new swing low. Okay, you know what I'm saying? So coming into the market, we put in that new swing low. We started pushing off of it pre-market. Basically, I'm thinking, or now I'm looking for new support and resistance levels intraday to trade. And I noticed we have this strong pivot point right here. Sellers stepped in right here. They tried to push the market down. Buyers tried to push it up. It's basically a fight between buyers or sellers, whether we're going to continue trend and make a new high or fail at this resistance and make a new low, right? So I'm thinking if we fail here, start pushing down to make a new low, I could start looking for shorts, whatever. Or if we break above this pivot level, we can look for longs. Why is this pivot level important? Well, because this is where we know that above this, like, see these pivots over here? Boom, boom. We know that above these resistance levels, we can move up to here. We have had a big run up, so sellers are trying to push this down here. We know if we get through it, that means buyers are in control. It's likely that we will see a move up into this next area where sellers were bears versus bulls, right? If the bears win this battle, if the bulls win this battle, we're going to come see these bears at a higher price. If the bears win this battle, we're going to see the bulls at a lower price. So bulls happen to win, right? We know we're already with the high time frame structure, right? Because we made this low and reacted and started pushing up. Then we got above a little minor resistance zone on the lower time frame. So now that we're above that, we're simply looking for trades back up into the higher time frame structure, which could be a retest, it could be a breakout, it could be anything. I happen to wait, and I saw this nice flag. We broke this flag, perfect little bull flag pattern. I got in, longed up to here. I caught about 5.5, 6 points on one contract. All right, let me go over this again. We're putting in higher highs and higher lows. We know if the trend wants to continue, we need the bulls to defend the higher lows. So previously this was the higher low, right? New high, put in a higher low right here. We know bulls need to defend this low for the trend to continue up. We come down, buyers step in around this area, defending this low. We make a new higher low, start pushing up. Likely that we're going to come see this high. So we're looking for trades. Where can we look for trades? Well, you don't want to look for longs below this major resistance level because there's bears there reloading, trying to push it down. We get above it, then we look for our trade. We happen to just see a nice flag set up, and we riding above that VWAP, crossing above the 8 EMA, ride it up there, 5.5 points. It was like $560. Okay, and then I was done for the day. I come back in Asian session, right? I'm on New York time, so 4 p.m. market closes, 6 p.m. it opens. So it's 6. So I'm obviously gonna be paying attention to this in Asian session or even to London session, because, like I said, you make a new higher high, you have to make a new lower low. And because we had this strong pivot point here that was a major selling point, resistance point, now that those bears are gone, right? Because we broke through it, the bears are gone. Now that could be the area where bears switch to bulls, or it's just they use it as a buying area, which was once a selling area, now it becomes a buying area. So I'm thinking, okay, we made a new higher high, wait for the pullback, and waiting for the pullback, I'm thinking as long as this swing low, because this was the most recent low, swing low, as long as this doesn't get broken, buyers are still in control. I could have, one thing I was looking for is if we didn't bounce here, we broke below it, kind of rejected off of it, then I would look to play short on the lower time frame down into this area and then look for longs out of this area, right? It's basically just buy whatever the trend is, buyers have to defend their areas in an uptrend, right? Because if the swing low gets broken, then obviously it's not an uptrend anymore because we made a new lower low. So I'm thinking either we're going to bounce here because this is a clear support level and move up, or we're going to maybe move back down here into a supply zone, or a demand zone, anything, some resistance, support, pivot points, and then we're going to move up. But we did make that new higher low. We got our pullback, put in a new higher low to then move up. Now let me show you my entry. That was my analysis. Everything bounce here, whatever. I wanted to look for a nice reaction off of that level before looking for longs, or like I said, if we get below it and start showing bearish low time frame price action, then we might see a bigger retracement. Okay, so I stayed up till like 2 a.m. to take this trade because at the time we were there, it was only 10 o'clock, 11 o'clock. Yeah, 11 o'clock or something. So we got initial push up, came back down. Always gonna in the middle of the night like this Asian session, I don't like to, it's less volatile, so I'll wait for a pullback. Like I wasn't gonna rush in right here, and I didn't really have anything to work with either. I like to trade like either a chart pattern like this, like above a trend line or above a support level, not just a low time frame bounce to a high time frame level. Okay, but anyways, we come up, we kind of funnel down, build into a little wedge, and then we break out of it. I was monitoring this on my phone while I was in bed. I wanted to take the trade right here, right? Like that would be my ideal entry, waiting for this wedge to break, right? Because we build into a wedge, consolidate, say we break out of it with strength, which we did. That would be the indication that, we're gonna hold this level and we're gonna move up. But it happened really fast, big explosive move. I didn't see until we were already like way up here, and I was like, damn, I'm gonna miss the trade. And basically I set a limit order to this high, which thank God I did because it came down perfectly to that level. I was like, all right, whatever, I'll try and get in on the pullback. I set a limit order here, a stop loss here, and I went to sleep. And this was at 2 a.m. And then I didn't check anything until 9 o'clock in the morning Eastern time, and I closed the trade about $1,000, $1,070. It was right about here, I think. Right about here, I closed the trade. Let me see this because I made about $1,070, which would have been, again, one contract for 10 point something points right there. Boom. Right, you could have took the smart thing to do would be take profits there, but I know gold loves to run. When it's in trends, it is not, you think, oh, it can't move much higher than that, just take your profits. It will move much higher than that. Okay, so those were the two trades, using the market structure to reading the market structure to frame trades, right? Pay attention to those higher lows, higher highs, support and resistance levels. And look, I didn't trade yet today, but this is continuing today because I don't have much to work with. It's kind of just going straight up at this point. But say you switch down to a lower time frame, it's the same exact thing. All right, we put in a new swing low right here. We put in a new swing low right here, make a new high. We pull back, new swing low, new swing high. We pull back right here, new swing low potentially. Maybe I'll look to trade this. If we hold here, get a nice close on this 15-minute up here somewhere, hold value, keep moving up, maybe I'll look along that. But you could have traded this, right? We pulled back to this swing low. It gets defended. Could have traded the move back up to here. Maybe this gets defended right here, moves back up to here. So market structure and swing low, swing high. Start reading that stuff. Pay attention to it. Could really help you with your win rate being on the right side of the market. And yeah, if you like the channel, subscribe. If you don't, subscribe, like, comment, whatever. Okay, goodbye.